Have you ever wondered why the school system just simply doesn't incorporate financial literacy into a school system? They don't teach us about money, they don't teach us about taxes, they definitely don't teach us about wealth creation. Have you ever wondered why? Here's a simple thought. Simply because you would not be able to be used. That's right, you and I are put in a school system to later on be used. Let me explain. From the beginning of our lives, kindergarten, first, second, third grade, you and I are brought into a school system to be taught to by teachers. Many of us then are told how to think, what to say, when to speak, when to stand up, when to go to lunch. We're programmed to answer to a bell that rings when we need to move to our next destination. We are told exactly what to do. We are drones. We are robots. We're simply not taught how to think for ourselves. How many times have you and I been through a situation where, hey, I wish they taught this stuff in schools. Now, they teach a bunch of other stuff in schools, stuff that may not advance you from a financial standpoint, a lot of other unnecessary distractions. I mean, think about this. We have the opportunity to get wealthy. We're just not exposed to it early on in our lives. For many folks, I discovered entrepreneurship, I discovered about money more from the bad mistakes with money than from the good. Imagine how much my life would be if I started learning about money in the school system, started doing case studies and analysis in middle school, started finding partnerships and the right strategic alliances while in high school. So therefore, by the time I graduate high school, instead of spending all this money in college, I've got a business, I got an entity, I got an operation that prints me cash. And your kids have the same opportunity to have it print cash for them. But we don't have the school system, that type of education currently right now in our school system, do we? And here's the sad part. You and I, we're sadly conditioned to be merely pawns in this rigged system. When everybody else is playing chess, you and I are caught playing checkers. So who benefits? Who benefits from us being financially literate? Who benefits from us not knowing how money works? I say two things. Number one, A, the government, and B, the banks. And some of you might even say, even the elites will benefit. One of the first books I ever read in my journey to understanding money was Robert Kiyosaki's Rich Dad, Poor Dad. Talking to Robert Kiyosaki helped me unlock a way to think about money, to make sure that I was okay to deviate from the system, to deviate from this rigged system, to say it's okay to be the black sheep of your family. Because in that book, Rich Dad, Poor Dad, he didn't listen to his natural dad, his well-educated dad, his PhD dad, his academic dad, his broke dad, his poor dad. He listened to his best friend's dad, the rich dad, the wealthy dad, the entrepreneur dad. Because you know why? Because he wanted that life. And let me ask you a question. If you're watching this video, what type of life do you want to live? The average Joe, same old, another day, another dollar type of life? Or you want to be happy, purposeful, excited about your next day, just having a life of intentionality, being proactive about your day versus being reactive and defensive about your day? Which one do you want? Well, let me tell you, you don't have to settle for what's going on in America today. You don't have to ever settle for what gets pushed on upon you in terms of debt, poverty, just the same old. Everybody else does it. I want to encourage you once again to remind you that you and I have this thing called free will. You and I have the free will to break down these barriers, to get rid of these doubts, disbeliefs, to get rid of the fact that you think that failure is a bad thing. Actually, it's the most important thing for you. Actually, success is just failure turned inside out. Now, here's the thing about free enterprise, entrepreneurship, and capitalism, is you're free to buy, you're free to sell, free to win, but at the same time, free to fail. But first things first, though, we had to understand how money works. I'm reminded of my favorite scripture in the Bible once I came across it, because oftentimes people look at the Bible as a book of weird scriptures and quotes and hymns. The Bible in Ecclesiastes says that money answereth all things. And going back to my favorite scripture as it relates to money and us having the power to do something about our current circumstances is Deuteronomy 8:18, saying that God has put things in place for you to have the power to create wealth. Now, we have the power to create wealth. It just doesn't land on a lap. We have the power to do something about it if we use and invoke that power. It's just going to land in our bank account. You and I have to do something about it. So to understand money better, let's go to the beginning. What is money? Money is defined as a medium of exchange that is centralized, generally accepted, recognized, and facilitates transactions of goods and services. Now, as it relates to money, here's where things get weird. We are more useful if we're just content by being used by the elite and the government and its tax system, if we do nothing about our current circumstances and decide just to be saying, you know, I'm okay being part of the middle class. They're not rich, but they're not poor. They're right there in the middle, which makes them mediocre. And the sad part about that situation is that it's easier for you to be controlled in that situation. I mean, think about it. How many people today would say that they love their job? Matter of fact, is that more people on Monday morning at 8 o'clock in the morning have the most heart attacks in the country at that time frame. How many times have you felt that pit in your stomach on a Sunday night because you're going to a job you just can't stand that Monday morning? Well, that's what happens to people. That Monday morning, to go to a job that has them overworked, that's them underpaid, that they're generally not appreciated, they're undervalued. They got the mortgage, they got the rent, they got the car payment, they got the student loan payment, they got the credit cards, they got the kids they got to feed, because they haven't understood yet to think for themselves on how money works. Now think about this. The three biggest things that most people buy in their entire life is what? A house, a car, and college education. Now, with that being said, do most people in the multicultural middle class buy this with cash straight out, or do they finance it? You and I, we spend money on things that the elites create, but here's the issue. Most people in the multicultural middle class buy those things by borrowing money first from the financial institutions that the elites and the government own. And again, who benefits from you being financially illiterate? Who benefits from you and I not knowing how money works? The government, the banks, and the elites. And by the way, what happens when they get your money? You know what they do too as well? They gather your money and they lend it to other entrepreneurs. They lend it to other people so they can double, triple, and quadruple what they borrowed from you by loaning to other folks, because you're a consumer versus being an investor. And by the way, think about how the media calls many people in America. Consumer spending is up, consumer spending is down. Consumers, consumers, consumers. They call you and I consumers. You ought to look at that and take offense to that. I'd rather be called a producer. I'd rather be called an investor. I'd rather be called an innovator, because now I create value. And guess what? The people that enjoy the best things out of life, they're the ones that create value. Now here's the sad part. While your money, hopefully sitting in the bank, guess how much more valuable that dollar is the next day or the next month or the next week? It's getting less and less. Why? Because that money is earning an interest rate less than inflation. And guess what the elites are doing? They're taking your money and earning way above what inflation is costing people. If they're borrowing at 4, they're earning 8. If they're borrowing at 8, they're earning at 12. They're borrowing at 12, they're earning at 18, 20%. They're leveraging money in a way, instead of consuming it, but to create more cash from the money that they're flowing back to currency again. And that's the system that you and I need to use. So therefore, we can rig the system in our favor versus just only the system of just the elites, the government, and the financial institutions. So I've jotted down 3 major categories of strategies that you can leverage and use to break away from the system, again, to have the system work for you versus against you. Here's number 1. Just like the elites do, just like the financial institutions do, just like the government does, you and I need to learn how to leverage debt. I know all you Dave Ramsey fans are screaming out there right now, but listen, leveraging debt smartly for investment purposes, not for consumer spending purposes, is one of the fastest pathways to get ahead. Let's look at some of the ways that debt is utilized to leverage cash flow for your favor.
I'm $1 billion in debt.
You're $1 billion in debt. Is that all in real estate, or did you use debt to buy gold mines as well?
No, I use debt in real estate. Let's say I buy a property. Here's a property, I buy it, I finance it. Then we refinance it, we borrow out the equity. With the refinanced equity, I bought the gold mine. And guess what pays for the debt? This. And I still own the gold mine. And that's why I went to tons of gold. So the smartest guys on earth are real estate guys like Trump, you and me. We borrow this to buy this that buys this apartment house, buys that. It's called finance.
Yeah.
By the way, there's a lot to learn there, but the concept is very, very easy to learn. To go in debt, but that debt, instead of buying a car, buying clothes, buying things that depreciate in value, he's buying assets that return an income stream to service not only the debt, but the net profit then goes to him for doing so. So therefore, there's a financial incentive for him to actually borrow money, which leads me to another strategy within inside this leveraging debt. which is buying a boring business. Let's take a look what this young lady says.
Boring businesses that could make you millions. That's usually what I'm looking for. One of the ones I think is fascinating right now is interior door replacements. I looked at one the other day. All they do is replace the interior doors in houses, which break down much more often than you think. How boring is that? This company is on sale for $125,000, but does $1.2 million in revenue. They essentially make money off the fact that they have services that they can provide to charge for, and a little bit of an arbitrage that they charge more for the door than what they actually pay for it.
This reminds me of a class trip I took with my son, and I was a chaperone, and one of the fathers was also a chaperone, and he owned a family business that this young lady here would probably classify as a boring business. What did he do? Blinds cleaning. He cleans people's blinds. He goes to people's houses and they go dust the blinds. Blinds, not the house, not cleaning the house, blinds. That's all they do. And guess what happened after they started cleaning blinds? The customers, whether residential or commercial, guess what they started asking? Hey, do you sell blinds? Guess what they got in the business of doing? They took a little small business loan, took some advance on a credit card, they got in the inventory of blinds, and guess what they started doing to the customers? They started installing blinds, they wrote the ticket for that, they started making a profit, a margin on what the blinds cost to them versus what they actually charged the customer. They sold that, they upcharged that, and guess what they did is returning service, cleaning the blinds. So this is a simple way of buying a boring business for you to make cash too as well, as an example of a boring business. Another boring business is laundromats. Another boring business is vending machines. Another boring business is a car wash. These are boring businesses that you don't think are actually cash cows. So these are things that people do on a frequent basis, everyday basis that you want to think about. It may not be sexy, but it's definitely something that people utilize on a daily basis, which in turn creates for you revenue. So therefore you're no longer part of a rigged system. You've created your own economic system, and now you're economically empowered. Third one, start your own sales business. I'll give you an example. I started my own sales business with less than $500 by getting an insurance license. So I made my first couple sales in life insurance and annuities, and guess what I did with the revenue after that? I took $5,000 charged on my credit card to mail to 5 different zip codes, and I would invite them to a dinner seminar, and at the dinner seminar I would educate them on their planning for retirement, how to save taxes, how to maximize with the Social Security system, how to maximize the Medicare system, how to maximize making sure that they protect their money from taxes and unnecessary losses and spending. So therefore, in the last chapter of their life, they're living their last chapter of life in financial dignity. Here's a sad reality for a lot of people in their 60s, 70s, and 80s. A lot of the friends that they grew up with, a lot of family members that they grew up with, sadly, have passed away. And sadly, many people are 60, 70, 80 years old, are lonely, they need new friends. Well, on top of that, do you want to compound the lack of financial management to add on to this burdensome part of your life? If there's no finances, there's no friends to enjoy it with? Well, guess what I did? As a business, I took a $5,000 piece marketing campaign to mail to 5 different zip codes, to mail 5,000 pieces of mail, to invite them to my dinner seminar. I spent another $1,500 on food. But guess what? I turned that $500 license to a $5,000 investment to a marketing campaign to a $25,000 commission for my first seminar. And I did that for 13 years, over and over and over and over and over again. And guess what? My best year is making $300,000, $350,000 a year using that model. And not bad for a single father, raising 3 kids, no outside help. Had a nanny, had all these things, live in a very good neighborhood, so therefore my children go to very good schools. So if I figured out this $500 license, this doesn't mean you got to go into debt in real estate. It doesn't mean you have to get a $120,000 loan to start a boring business. I took $500. And I don't care if you're selling real estate, you're selling tax services, you're selling credit repair, whatever it is, you're selling landscaping, you're selling snow shovel services. Very simple business like that. During season at a time, you can flip, create customer accounts, create a route where you can charge people 20, 30, 40 bucks if that's what you're doing with the landscaping and snow removal route. This way you can create a very inexpensive business for very little capital. Which leads me to my 4th strategy, which is flipping things. Now, with that being said, in the news, Christian Dior, actually I'd say LVHM, just got exposed because they were discovered that their Christian Dior bags, there was an Italian stakeout, they discovered that these bags are Christian Dior. Even though they're being sold for $2,800 plus, what did it cost them to make? 57 bucks. Ha! By the way, why should you be surprised? Now here's the crazy part. Guess which ethnic demographic LVHM sells a lot to? That's correct. The black and brown multicultural middle class community. Sad, horrible. In other words, we make middle class income and we buy some of the most luxury goods, expensive products in the world, and yet they're laughing at us because it only cost them $57. And you and I grew up in families and in communities where people are getting their tax refund checks or going to loans. They spent their pandemic checks to buy these damn products, and they wonder why not financially ahead. You know why? Because that's called financial illiteracy. And not understanding how the system is rigged against to keep you broke. You see, consumerism is a way to keep you and I broke. And if you don't understand the way money works and you don't increase your financial literacy, guess what? For the rest of your life, 10, 20, 30 years go by, 40 years go by, you'll always be spending things, and next year you wake up, you're 50, 60, 70 years old, like, damn, I want to retire one day, but I can't. One of the pictures I took when I first started my career, once I got my insurance license, I was at a stoplight, and there's a guy scraping with a shovel, concrete, and he had an orange vest on. I noticed he had white hair. I said, man, this guy is 50, 60, 70 some years old, still working outside here in the heat. He's got no money working for him. Is that what I want to experience for the rest of my life? This guy's still working hard. And by the way, honor to him because he's out there working. He's not depending on the system, but he's working for his cash. But working for what though? Again, he's working for his cash instead of what? His cash working for him. So what do you want? Cash working for you or you working for cash? What do you want to do? So when you're looking at this business of flipping things, you have the opportunity to go out there, maybe take, and right, this is what flea markets are popular for. You can go out there and buy products. For example, I was just going down the street, and sadly, they're selling flowers at the side of the street. You know, I felt sorry for the family because it's a hot day, 105 degrees out here in Texas. He was out there with his son. He was selling for like 10 bucks a piece. I gave him a $50, the only cash I had on hand was a $50 bill. I gave him a $50 bill, so you keep the change. And he gave me two flowers. I gave one here for the house for our nanny to put up in her kitchen, and I gave a set of flowers to my wife. But that's an example of what? Buying things at a cheap price and selling it at a higher price. And people do that with Amazon e-com too as well. So there's many different ways that you can do this by flipping things for a profit. Second major core category and strategy I want to talk about is leveraging life insurance as a business building and wealth creation tool. One of the biggest scams out there for our benefit is when we pay these little premiums for these life insurance companies to pay us what's inside the policy in terms of cash value, or sadly when you suffer a heart attack, stroke, or cancer, or sadly when you pass away. That is one of the biggest scams out there for our benefit. People think, what are we talking about, Matt? I thought life insurance is only when you die. Life insurance is only a ripoff when you die, when you don't pay the premium. You want to hold an insurance company to its feet? Pay the damn premium that you promised yourself to for 10 years or 20 years or 30 years, however the term is, and watch this life insurance company obligated by law, obligated by contracts, that something happens to you within inside the claims of that policy, that they are obligated to pay you X amount of dollars at your demise, or in this case, in living benefits, at the dealing of a heart attack, stroke, or cancer, and you survive it, or if none of that stuff happens, you don't die too soon, you don't suffer from a heart attack, stroke, or cancer while you're alive, and you survive it, and you're soldiering forward, but none of that stuff happens to you, guess what happens to MoneySide Life Insurance, permanent life insurance contract. Specifically, I'm talking about index universal life, whole life, and universal life. You know what you can do with that money? You can use that for, yes, investment purposes into other things. You can withdraw from cash value, either withdraw the cash you put into it or loan against the cash value, money, and for some cases, a lot of these policies have what they call zero cost wash loan provisions, that there's no cost for you to borrow your own money, because that's what a lot of the trolls out there say, that there's cost of you borrowing your own money. Well, after a certain parameter, a certain time frame, there's zero cost loan wash privileges from withdrawing or loaning from your money. By the way, loaning money from your policy, there's no cost. Zero cost wash loan happens after a certain period of time that the policy is enforced. That being said, you can use that money to buy businesses. You can use that money to buy equipment for your business. You can use that collateral in your life insurance policy to expand and grow your company. There's so many different ways that life insurance policies can be leveraged as a wealth creation and business building tool to help you build your business. Now, here's the thing though. A lot of people look at instant gratification. Like they want money now. For example, they look at life insurance policy as, if I put my money now, can I take it out within 30 days? Zero chance. Zero chance. I'm gonna take more of a conservative approach. And for whoever's watching this content, I want to educate you that if people out there are telling you can take your money out of your life insurance policy right away, and there's no hard string provisions against it, there's no strong parameters against it, they may be misguiding you. I'm not saying all, they may be misguiding you, making you feel that a life insurance policy should be treated as a liquid checking account, which is one of the worst ways to look at life insurance possible, which is called instant gratification. Now, I've always invoked delayed gratification in my life, and guess what? Long term, it's paid off. I've always looked at a lot of my business decisions after making a lot of mistakes as long-term business decisions to make sure I'm staying in business for the long term. Why? I got long-term goals. I got long-term aspirations. I want to create generational wealth. I want to create generational wealth for 3 generations at least deep. That's myself, my kids, and my grandkids. That's a lot of money that I need to create generational wealth. Not generation wealth, but generational wealth. I need a lot of money for that. And so when we're looking at leveraging life insurance policies as ways to create wealth, there's specific strategies and how to do it. Now, I'm attaching some videos here that you guys can check out later on, but these videos here are used for very specific ways, so therefore you can leverage the life insurance industry to help fund and finance things that work for you, not against you, so you can really create a new cash flow stream for you, because people already understand, man, I need more assets than liabilities. But you know what leveraging life insurance allows you to do? Leveraging step 1 allows you to do, the first strategy allows you to do, have more cash flow coming in than you have expenses going out. So when people say assets are liabilities, I say cash flow over expenses. And the moment expenses go up, guess what you need to do? Either you need to decrease your expenses or to increase your cash flow. But the moment it reverses, that's when you come into a lot of trouble. And by the way, this is what happens when people want instant gratification. One of the 7 sins I coach our entrepreneurs to avoid is to avoid on living on your business and your income on that business too soon. I've always capitalized, I've always saved my money. First 7 years of our marriage, Sheena and I rented a house before we bought this house. For many years, Sheena and I didn't buy fancy cars, although we could have. We were making $500,000 a year, $750,000, we were making $1 million a year. We didn't buy fancy cars for a long while. Shoot, I didn't have my first pair of Jordans until I was age 42 years old. Now I got a bunch of them. Because I invoked this thing called delayed gratification. Not everybody was making out. My children made out. They got what they needed. My kids got J's. I didn't just get J's, but delayed gratification on my end. The other aspect is trusts. Let's take a look at what this video here has to say about trusts.
So you're a billionaire and you've run into a problem. You've amassed all this wealth, all this power, but you're getting old. And your kids, your nieces, your nephews, they're all lining up to kiss your butt to make sure they get listed on the will. But your family doesn't know anything about money. They didn't have to grind it out like you did. Everything was given to them. So if you leave any money to them, they are gonna squander it. No, seriously, a staggering 70% of wealthy families lose their wealth by the next generation, with 90% losing it by the generation after that. 2 generations. That is all it takes for all your wealth, all your hard work, the empire you've built to go circling down the drain. You cannot let that happen. But lucky for you, ultra-wealthy dynasties have already figured out how to solve this problem, and at the center of it all are the Rockefellers, who after 80 years since his death, 7 generations later, John D. Rockefeller's family is still standing as one of the wealthiest families on Earth. How wealthy? Well, no one knows, because they're just that good at hiding it. And in this video, we are gonna expose it all. Trusts, family foundations, family offices, and a super clever tactic that not many people know about. Stay dangerous, this is how the rich get richer, and this is definitely not financial advice.
Yeah, it's so important to have your money go back into a family trust, so therefore you maintain privacy, because if you don't put things into a trust, your assets, the proceeds from your life insurance policy inside an irrevocable life insurance trust to pay off any estate tax due post your passing, is that you avoid probate court, meaning that if you don't put your affairs in order, then the court system is going to determine how to divide your estate up with your family, your friends, and anybody you potentially may owe money to. And once your information is submitted to probate court, now your information is officially your assets, your liabilities, everything that you own, anything that's under your name is now public information. And so people can come out to work and say, hey, yo, yeah, that guy Matt Sapaula, he owes me money, right? Well, how documented? You got to document and proof. If nobody in your family or your attorney can prove that, or your state does not owe that money, well, guess what? That person might just walk away with X amount of dollars away from your family inheritance. Instead of going to your family, somebody may erroneously or fraudulently try to stake a claim on your estate because it's no longer in a trust. That's a problem with probate court. People can come out to woodwork, and you have to have the right documentation and right people to challenge anytime somebody wants to stick their hands in your family wealth. That's why having a trust is so important. And at the same time too, for those of you who have blended families out there that you may have gotten remarried, it's also very important that you divide that wealth up to the children that want to receive it, because you would hate to think that you end up creating a beneficiary as your ex. This is what happened to a person with the IRA, and they got divorced in the 80s and the 90s. There was an article about it, was floating around, went viral. But the person got divorced in the 80s and the 90s. Guess what they forgot to do? They forgot to update the beneficiary of the trust or the beneficiary of the retirement account. And guess what happened? That person passed away, and his current wife then was expecting to receive the retirement account. Well, guess what? The beneficiary is still the ex-wife. That makes for a very, very uncomfortable conversation. And so you want to make sure you update the beneficiaries of your wills, your trusts, and also your retirement accounts or your life insurance policies too as well. And if you want the 7-figure blueprint, I'll wrap it up and summarize it in 3 different phases. Here we go. Number 1, you trade time for money. If you're working for somebody, just know that this is temporary. Listen, if you're an employee, be a very good employee. Be a great employee. Because if you think you suck as an employee, you can do great as an entrepreneur, you got fooling yourself. And here's the thing too as well. Work for a small business, work for a founder that you trust, that you respect, that you know has a vision, that you know is going places. Work for him and find out all the lessons you can from your temporary time working there. The second one is cash flow over expenses. Let me explain. At this phase, you're learning how to recruit and build a team. You're learning how to be a good manager. You're learning how to become a good boss to your sales team, to your marketing team. You incorporate standard operating procedures, SOPs. You're learning how to understand processes. You learn how to scale a business from producing 1 product to 5 products and moving 10 products, 100 products at the same time. I'll give you an example. When I was a self-employed type of person, I was just an independent one-man operation. I'd sell 1 year, 100+ insurance policies and retirement accounts. Great for me, right? Awesome. I mentioned to you earlier, that was a $300,000, $350,000 a year income, but it's a one-man operation, no team. But the moment I started building a team and started incorporating standard operating procedures, understand what our KPIs are, key performance indicators and objectives and key results, to focus on productivity, not just the activities, guess what happened? We went from 100 people helping a year with financial literacy and retirement planning, insurance planning, to over 200,000 agents over the last 9 years. Guess who won? Our clients won. Why? Because we decided to understand that our business is here to help people and serve people, and I couldn't just be a one-man operation. That's why income, cash flow over expenses. Third phase on your road, blueprint to 7 figures. You might, instead of running your own business, you might want to use that cash and capital to buy other businesses where you hire the operator. You hire the guy that is there that does the day-to-day, does the hiring, does the firing, does the execution. You hire the operator, they do the day-to-day, you still get paid. Why? Because you own a piece of the business. You got money working for you. That is a great pathway to get you to 7 figures. And also part of this third phase is this. You're going to be a master at processing issues. Yes, you want to get paid the big bucks? Learn how to process issues. You want to get paid the big bucks? Learn how to minimize and eliminate distractions. You'll be able to go from 6 figures to 7 figures. Is going to involve a lot of processing issues, because guess what? When you decide to do something big in life, you have to expand your bandwidth. You have to expand your capacity. So therefore, there might be also a very appropriate way for you to invest in your own personal development. That's why I wrote the book, Faith Made Millionaire, because when I realized at this point, I'm like, oh Lord, help me out here. Oh Lord, how to help out with the clients that charge back or clients that turn away and say no to me? What about the people that quit on me? A lot of faith. Oh Lord, you open up new markets to me. A lot of faith is in this process. Faith over fear. And so in this process, I learned how to manage my ability to overcome distractions. And guess what? Because I learned how to overcome distractions, because I learned how to minimize fear and increase faith, guess what I did for everybody else in my company, in our mastermind and our mentoring? We help them do the same. So they're building a business, 6 figures, 7 figures, 8 figures. Now, because they learned how to master this great trait, this third phase of the 7-figure blueprint. That being said, which phase is most important to you? Which part of this, how money works, you agree with? You don't agree with, please put in the comment section below. I'd love to hear your feedback. Who knows? We might react to it in a future episode here of the 7-Figure Squad YouTube channel. That being said, make sure you subscribe, hit like, and share this with your friends. They're aspiring entrepreneurs in growth of sales leadership, and entrepreneurship, and faith and finance. From Dallas, Texas, I'm your Money Smart Guy. And until we meet again, continue to live smart, continue to love smart, and be money smart today. Bye-bye.